Good morning. Welcome beyond the SEAF model. I'm Jack Kosar. This is effective for the week of September 29th, 2025. Let's get started. SEAF signals for this week. We got technology, utilities, and consumer discretionary. I guess depending on how you view utilities, that could be risk on with consumer discretionary and technology. Or if you still view utilities as more of a defensive sector, this could be a mixed bag in terms of what the top three are. Interesting enough, top three include several 14s here. Now, just as a reminder, I don't think we've had this happen in a while, but just wanted to highlight why certain sectors were picked when they're all the same ranking. And the way that the rules work is we always pick the top three. In this case, we have utilities, consumer discretionary, and communication services, all with a ranking of 14. The next default there is the trading week. So the reason that we go with consumer discretionary and utilities over communication services is because utilities has a trading week of 2, consumer discretionary has a trading week of 7, and communication services has a 10. The reason we go with that is that it's the newest money, it's the freshest money, and theoretically the most relevant money. Now, I guess the other side of that coin is, why don't we always just go with the trading week? Why do we have the tactical month and strategic quarter at all? And that's really just kind of highlighting the momentum that we see as the velocity of money is moving in and out. The trading week is very whipsaw. Money will flow in and out, especially in periods that we're in like right now, where we're seeing money kind of zip in and out of the different sectors. This is way too whipsawy. It does not test well. What really tests well is when we have those 3 different time periods, allowing for that really strong momentum for several months into the month, into the week, kind of to affect how the flow of the SEAF model runs. At the bottom here, we got healthcare and financials, and then a little bit of a peak of energy. Here at the trading week 1. Heading into our heat map, a little bit of disjointedness here. We're seeing some reds here floating up at the top, a little bit of green here toward the bottom, and kind of everything in between. Last week was an interesting week. We were down cumulatively negative 1.9% if you for the 11 sector spiders as a total in terms of outflows. 4 of the 5 days were down days, with the exclusion of Friday being the only up day. Didn't quite hit 1%, but was close. Looking at our numbers, energy on the trading week, this is a 0.28% move up. Our significant move is 0.4. When we did some back testing, we noticed that the really kind of the significance is when we get over that 0.4. So this is 0.28, so kind of missing out there. 2 coming in at utilities at 0.17, which isn't bad for a number 2, and 3 in industrials at 0.14. Seeing outflows of 0.37 and 0.33 respectively for financials and communication services. This looks like a table a little bit in flux for me. Technology taking a little bit of a break here with a 5 on the trading week. And again, utilities kind of rebounding with strong strategic quarter and strong trading week with the middling in between, and discretionary eking out communication services with a stronger trading week over communication services trading week. Looking into our total AUM chart, this was interesting. We did briefly drop ever so slightly, drop below that 21-day moving average, but it did not hold. We rebounded right away. We still have this broader uptrend. As you can see, we have tested this 21-day average multiple times. Little wiggles with each of those tests, but nothing that has been sustained. I think a sustained move under this 21-day moving average is important for the overall direction of the market. But as of right now, we did see, like I said, 4 out of the 5 days we saw asset flows leaving the broader market. There was a little bit of hesitancy there, but that's the support held here. This SPY chart, I should have put a 21-day moving average here, but the down day on Friday actually coincided with Thursday and Friday coincided with, or the down day on Thursday coincided with the 21-day moving average holding as support. Heading into our rainbow charts, I wanted to bring up financials. Financials was highly favored, and this just kind of goes back to this frenetic pace of money flowing in and out of the various sectors. which again, we're inching higher in the market, but I think trying to find that clear leader, trying to find that next sector that's going to kind of rip forward is been fleeting for a lot of managers, with valuations being relatively high, trying to find that, what's going to catch fire here. So as you can see here, we went up, we picked up from a void into this favored. We got a little bit of relative outperformance, touched back down, attempted to come back up and remain down. We're a little bit of a downtrend here on financials. But again, just highlighting this chart is bringing up, kind of the frenetic pace here as financials, took a quick header after attempting to make it up into that upper favored. Looking into energy, I bring up energy for a reason. One, on the trading week, that nice positive skew that I like to see when things are on the upswing. So from 10 in the strategic quarter, 6 in the tactical month, to 1 on the trading week. Unfortunately, that's not enough really to kind of get this thing going in the right direction here. We're sitting in middle neutral, little bit of an uptick off the bottom of the relative outperformance versus SPY. But as I've mentioned multiple times, energy has attempted to fake us out 1, 2, 3, 4, 5, 6, maybe 7, and who knows on this one. But over the last year, a lot of fake outs here. Attempted, we rip in, bunch of money kind of flows in, we get some nice aggressive relative outperformance versus SPY, and then the money disappears almost as fast as it came in. So I really do want to see some sustained moves into energy before I start calling an early lead. Occasionally we like to, as I'm looking at the numbers and looking at how things are trending, that, hey, this, for aggressive traders, this might be a good place to take an early lead. I don't see that here yet. I do like that we kind of have held support here on the relative outperformance versus SPY, but I really do want to see this thing shoot up and upper favored and even stay for a little bit before I'm like real confident that that money's going to be sticky, because honestly, over the last year, it just has not been for energy. Technology. Technology is up on top, taking a little bit of a breather on the trading week with 5, but strong dark greens in the tactical month and the strategic quarter for technology with 1s across the board there. Overall, strong uptrend in the relative outperformance versus SPY. And again, I think, sorry about that. I think I might, just taking a slight break, but we're still upper favored, right? Overall score of 7. That's relatively high. So things looking really strong still for technology. It's a good place to be. Utilities. Utilities got its way up. Now utilities is a little bit of a lower ranking. It's at 14. Kind of right on that neutral favor, but it is a SEAF signal for this week. We do have a little bit of a support here in terms of its relative performance versus SPY chart. So sitting on support, a little bit of an up move, ever so slightly turned up positive. I would like to see these flows really start to generate a lot stronger and diverge itself from the pack by getting up and upper favored. Again, we're not projecting cash flows. We're just monitoring the velocity of money through 3 time periods. So this is what it looks like. Utilities, money flowing in there at the moment, and SEAF signal. So we'll have to see if that increase in flows will start to turn around this relative outperformance chart. But again, looking like we're sitting on a little bit of support here. Consumer discretionary, very much a sideways relative outperformance portion on the chart. Again, this is also a 14 on the SEAF ranking for this particular week. Again, that's a lower ranking. Not seeing super strong flows coming into consumer discretionary. 7 on the trading week, being kind of held up here by its tactical month and strategic quarter. But again, we don't, the way that the SEAF's been running, outside of technology, probably for the last 2 months, really could tell managers are looking for something else to pop, and really haven't seen that consistency in terms of it popping for anything else. So money's flowing around. As of right now, money is flowing into consumer discretionary a bit lightly, but we'll see from here, right? We got a decent little uptrend in relative outperformance. Like I said, mostly trading sideways, but if you take this and look from August, we got a slight uptrend here, a little bit of resistance that we got to try to break through, but consumer discretionary SEAF signal for this week. That is all I have for this week. I look forward to breaking down the SEAF with you all next week, and thank you.